Okay, welcome to Q&A Cafe for today. My name is Alex Waddell. I'm hoping everyone can hear me. Uh, we do have a chat panel and a question panel, so feel free to drop questions in as we go into the panel, um, or we can answer questions on the end. So this recording will be uploaded later, and we can. You're welcome to download that as well. It'll be on our YouTube channel. So with that, let's get started. So today's session is really around how finances integrates with the purchase order. So I've created this little presentation. I thought we'd have a little bit of fun with this. I'm comparing this to a slot machine because if you've ever looked at a purchase order, there's lots of columns and rows. And depending on how you line up the different data in there really determines how your GL determinations are going to work. So I guess let's start with the beginning. First of all, I mean, what really is a purchase order? So, of course, it's a way to order products and services from your suppliers, controls the spending in the organization through approvals, uses predefined master data to leverage your buying power. And the reason we're really here today is it defines the financial recording of purchases in the general ledger. So what makes up the PO? There's various different elements of it. So the anatomy of the PO is essentially these fields that I've highlighted in red are what's really important to finance. And in that case, we have, the item type, the process type, the product ID, which potentially triggers a product description, the product category, and then not in the row level, but assigned to each row and located in the footer of the PO is the GL account and cost center assignments, which could be an optional way to override or provide GL accounting. And I'm going to get into each one of these fields in a bit more detail. So when we talk about each of these elements, so the product field is really a predefined list of materials or services. So this is a master list that you set up in the system and configure ahead of time and represents all of the potential products that you buy and sell. These could be items that you maintain as inventory. It could be items that you purchase as capital assets. It could be services that you buy that you simply want to expense. And in addition to that, the level of detail that you decide to keep in your product master is really up to you, depending on how many records and how much detail you want to put in there. And some of that will depend on maybe how you want to use the purchase order in conjunction with your relationship with your suppliers. So we'll start with, or then the next one is really the product category. So this is also a predefined list. So the users will only be able to get a drop down. This has to be set up in advance. And there is a relationship between product categories and the product material and service master that I just mentioned. So every product that you set up belongs to a single product category, but a single product category may have many items underneath it, or it may have no items underneath it, and it may just drive a GL account on its own. The item type field, so whether something is a material, a service, an expense, or a limit, we'll be getting into material and service quite a lot in this presentation. I don't have a lot in this presentation on expense and limit, so maybe I'll just talk about that really briefly right now. So this just changes the functionality of the PO, but the GL determinations are still driven using the same methods we're going to discuss today. So for those last two, a limit is what you would use if you're buying something where you want to set up more of a blanket PO that you want to draw down on. And in that situation, you could have a PO, let's say for travel, for $10,000 with a travel agent, and then each time you do a goods and receipt on it, you would just draw down on the dollars of the PO. And just so you know, if you've been using ByDesign for a while, you may not recognize this. In the past, if this wasn't available, you probably were putting, the dollars in the quantity field. That was a workaround that we had recommended for many of our clients. Not really necessary anymore. If you want to start using limit POs, you can just, instead of setting up quantities in your POs, you can just set up a blanket dollar amount and draw down on the dollar. And then an expense PO is essentially saying, well, regardless of the product or service, we're not planning on putting this item neither into inventory, nor do we expect there to be a goods and service receipt. So this also impacts the three-way match functionality on a purchase order. If you choose that something is an expense, and let's say you code it to something like maybe consulting fees, you're not going to do a goods receipt because the expectation is that when the invoice comes in, that's when you're going to recognize the costs, and it will be the AP invoice that debits the expense account, and there will be no goods receipt transaction. The system does not expect there to be one. And then process type, also used in conjunction with whether something was a material or a service, but typically for a material. So if something is a material, you could decide potentially to buy it into non-stock, saying that you don't want to inventory it. You could buy it into stock, meaning you're specifically buying it into inventory. And this also has some implications to capital purchases, which we'll talk about in a moment. Or it could be a process type, which is actually more of a drop ship scenario, which is third party, and we won't be talking about that today. That's more of a supply chain configuration. And then we mentioned that GL account, which is not in the row, but for every row, you could potentially set the GL account. That's in the footer of the PO. You'll recognize this if you are coding something to an expense account. You have to select, for example, a cost center or a cost object, a project, a sales order, or just an org unit that is a cost center to assign it to. And as part of this same selection fields, you could assign the GL account directly. And then regardless of anything else, the system will use this GL account as the way that it's going to code that line. And then Capex thresholds, this is something that the user isn't really selecting in any of those fields. This is something working behind the scenes. And this will govern how items will be capitalized. And so this can work with products or with the product categories, depending on how you've configured your system. And then the threshold can determine whether something is treated as an expense, whether it is capitalized, or potentially whether it is just expensed, but still tracked as an asset in the books, but it is not something that you want to depreciate because it doesn't have enough materiality to do that. Okay, so when we talk about all of these different combinations, we get into multiple different ways that we can do buying. So there potentially are more combinations, but I think ultimately you kind of end up with these 8 combinations. I would say that the system, this gives you a lot of flexibility, but it also causes confusion. It's hard to explain these concepts when we're trying to train the clients and configure the system. And if you end up sort of enabling every different way to do this, you then put that burden on your buyers to also understand all of the implications of this. So a lot of decisions should probably go into a lot of thought should go into the forefront to think about whether or not you're going to use a certain number of these combinations to do most of your buying. And each of those combinations you can see here in the dropdown, you may or may not have to potentially populate a field. So you can see some fields like the product field could be blank. So like in, well, for example, in scenario 1, it doesn't really matter what you populate, but you could override it with an account assignment. In scenario number 2, if we're going to be really using the material in conjunction with the product category and the product's blank, then that's what's going to drive the GL determinations. So I'm going to get into each of these in a little bit more detail. And so, for example, the first one is really just choosing a GL account. So this one is available, but I would say it's not typically used. And the reason that being is because oftentimes, if you do have a large community of buyers in your system, you may not want to train them how to code things directly. And if that is a concern for you, then you probably don't have them focus on doing GL account overrides. You would just say, you would configure the system in such a way that you have GL determinations in the back end, and those GL determinations based on the product category or the product or the service will drive the coding. And then you lift that burden of, the GL choice directly from the buyer. If, on the other hand, your buyers are just a small community, or maybe your POs don't really go out to your suppliers, it's more of an accounting job to record the PO transaction in the system, this may be a very appealing solution to do your POs, because you could potentially, with a lot less setup, just have GL account determinations and have them set them up here and have them code these directly because they understand how things could be coded. So once again, that really is a business decision depending on how your business is organized. And just so I'll mention here, if a GL account is selected, it does take priority. So you could have both of those configurations in play. But if you have a particular product, like a product category set as office supplies, and somebody changes it at this GL account level to postage, it's going to take the priority to the GL account determination. So it's important to understand that. And then the last thing I'll mention is in this pop-up list, because I have clients that ask me this all of the time. So if you are seeing these numbers like the A-7400, the A-7410, that's an indication that you're using the out-of-the-box SAP chart of accounts, as well as the SAP out-of-the-box GL determinations. This may sound confusing because you heard me say that they're selecting a GL account directly, but in actuality, they are selecting a GL determination that is then tied to a GL account. Why does SAP do that? SAP does that because your configuration could support multiple charts of accounts, meaning that you could be doing, buying for a US company and a company in Germany, and perhaps you have two different charts of accounts. So your buyers, when they select postage, it's sort of a nonsensical number, A7410, but behind the scenes, if you're buying into the US company, it may be going into a different GL account in the US chart of accounts, whereas a buyer who's buying postage in Germany may be driving it to a different GL account number. So that's why this is using a GL determinations. Despite that, you can set up your GL determination as your GL account number. So your pop-up may say postage, and then it may have a number that probably starts with 6, since mostly expense accounts start with 6. And it could have a number like that that looks like a GL account, but in fact, it is a GL determination. So keep that in mind. So buying by category materials. So this option allows the buyer to specify a generic category without having to worry if a specific product is created. So where does this come in useful? So if you have a product category, for example, that's something like safety supplies, in the description, you could type in the specific safety supply you are buying. So large red hats, extra large coveralls, work boots. You may need that description on your PO if this PO is actually sent to your supplier and your supplier is to understand it. So you would potentially not want to set up product categories for all the different types of safety supplies that you would buy. You would maybe just set up one. They would all go to the same GL account anyway, and then you would leave it on the buyers to update the description appropriately so that the supplier knows what to send you. So a GL determination is set up behind the scenes for that product category. If that GL determination is not set up, the user will get an error. And sometimes that can be used for your advantage. So maybe for some product categories, you want people to select a very specific product. And so you don't want the product category to drive the GL account. So either of those options exist, and now you're into some more sub combinations. So inside the PO, this is what the screen potentially looks like. So we are indicating that this is a material that we're purchasing. It's non-stock. Uh, the product category in this case, 110, is office expense. And then the product ID is left blank. So the organization doesn't bother having every imaginable office supply set up. So they leave it blank. And if it is blank, then they have to type in the product description. So if this PO is actually going to your, Staples for a purchase, they're going to need more than the word office expense. You're going to have the buyer type in, case of photocopy paper white, or the specific product number that they need, whatever it is that they want. So that is one very common scenario that we see in the system. Typically, if unless you are buying, hundreds and thousands of items from Staples, you're not going to try and create every imaginable product as an individual product in your system. You are just going to go with this solution where you're using a generic product category and then having the user overwrite with a specific description. So a sub-scenario of that is capitalization on certain product categories. So this looks very similar to the one we did before. It says material, it says non-stock. However, the product category has something hidden in the background. Because it's IT equipment, potentially a system administrator has said, well, this product category for IT equipment, if it's over, say, $2,000, we always want to capitalize that. And so this could work the same way. We could have the system configured in such a way that product category describes whether something is capitalized. It doesn't require a specific product ID, but the user would type in the specific product description. And then depending on how that configuration is done behind the scenes, the system would decide, okay, should I expense this if we're just buying IT equipment and it's a keyboard and it's $40? That's going to fall below the threshold and it's going to just hit a GL expense account. However, if it's a Lenovo laptop and it's over $2,000, it's going to create an asset record in your fixed asset system automatically, and it's going to instead debit your balance sheet. And then there is a third sort of sub scenario in here where you could set up a range. So maybe you say, well, between 1,000 and 2,000, I don't want to capitalize it and depreciate it, but I do want it to be recorded as a fully depreciated asset, so that the IT department can track it. We know that it does have some intrinsic value. We don't want it to go missing. So it will be fully depreciated, but it'll still appear. So all of those things, all of those three scenarios have nothing to do with choices the buyer makes. The buyer just puts in the information, what they're buying here, and the system is doing that based on how you have configured the system in the background. So another option, if we're buying by category for services, this option allows a buyer to specify a generic category for buying without having to worry if a specific product is created. So similar idea to our office supply one, we can create a broad category called consulting services. We can have a GL determination set behind there. And by virtue of the item type being set to service, the system will drive it to a GL account, and then the user can put in the specific description if this PO needs to go out to the actual service provider with enough detail for it to be meaningful. So in this particular case, what is different is the item type is service. They've accessed a product category that relates to services, training materials. And then in the description here, so once again, no product because the organization cannot think of every imaginable specific service. They're not going to set up specific product IDs. They are just going to enter a product description. And something has to be keyed in there, so that field can't be left blank. But the detail, how meaningful that description is, really depends on whether this is actually being sent to the service provider. So what is going on here, the difference between service and materials, is the configuration is a little bit different on the back end for that product category determination. And as a result, I would say that services are a little bit easier to configure in the system, to maintain, to set up new ones. Uh, and as a result, a lot of our clients decide that anything that is truly not inventory is set up as a service. So you may actually set up your product categories as office supplies to work with the item type service. And then it's a matter of training the buyers that they have to build the POs in that way. And if you decide to take that approach, it's to reduce maintenance for the administration people on the system. But sometimes it does cause a bit of confusion for buyers because they maybe get confused by the fact that, hey, why is paper a service? And in fact, what you're saying to them is, hey, if it's anything that's going to be expensed immediately upon purchase, just choose it as service. And then the product category will drive it to the office supply GL account, not a problem. But if that does cause confusion, you could do the additional configurations in the back end to set up the material type product categories that I showed you in the prior screens. If you have questions about that, I know that's a bit confusing, please drop them in the panel. Your system is probably configured that way because this is a typical way that we recommend clients configure it. So if you're confused why that is, please drop your question in and we'll try and address that. And now we're getting into buying products to stock. So this option allows a buyer to select a specific product from a list of master data. This one has the most rigor and controls around it. So the GL determination is set up at the product master and it's no longer at the product category. There is a product category associated with this product, and that is now exclusively for reporting and searching purposes. It does not drive any GL accounts. All the GL accounts are determined at the product level itself. And then to stock product, you're going to debit inventory. It will require transactions to record the physical receipt of the product into the specific warehouse. So you may be familiar with that. If you are doing a three-way match process on a service, you can do a simple purchase order. You can do right off that purchase order list, you can click the button that says goods and service confirmation. You get a very simple goods and service confirmation, and then you can promote it to an invoice. For products, it's a bit more tricky because if you do have a product that is inventory related, there are now logistical transactions that have to occur, to determine which inventory, which warehouse, which bin, whether there's a quality check on the product. So all of those things could be configured into the specific product and system settings for you. So what does a stock purchase look like? A very common scenario is this one. So the item type is material. It's flagged as to stock. Chances are you have two choices to key this. So if you choose the product category ID first, you could select electronic parts, and then when you invoke the drop down for product ID, you will only see products that are electronic parts. Or conversely, you could start on the product ID field. If you know what the ID is or that it is a safety valve, you can start typing that, and it'll populate on your behalf the product category that it belongs to. And in fact, the order of these columns is completely decided upon by you. So you can use the settings in the system to reorder these columns. Typically, out of the box, product ID is before product category. I've just set it up this way because I think it makes a bit more sense for understanding here. But that's also configurable by you through adaptation mode. And buying products for consumption. So by indicating non-stock, the buyer is choosing to expense this item at receipt. This option allows a buyer to select a specific product from a list of master data. A GL determination set up specifically at the product master data governs this item. And typically this will debit an expense or cost of goods account. So this process type causes the purchase to be expensed rather than going into inventory. There are settings in the background that kind of dictate whether or not this will work. So it's not always really the discretion of the buyer. Sometimes it's the way the item is set up itself. So if you do want to manage all of your individual, hundreds or thousands of products in the system, you can get into all the various configurations at the product level, whether something is really inventoried, whether something should always be sort of just bought into an expense account and consumed on purchase, which is meaningful for small electronic parts. Maybe you don't want to have it on your balance sheet, or maybe you don't want to have to do stock counts on it or things like that. You just want to track how many you buy, but you want it to be recognized as expense the moment you buy it. So those decisions may or may not be the buyer. Once again, depends on how your system is configured. And buying products as fixed assets. So we mentioned the scenario where you're buying product categories as fixed assets. The same thing can apply to a specific product. So if you have chosen a product as non-stock, depending on configurations in the background, the system may choose to capitalize this purchase. So once again, there's a GL determination. It is associated to the product category, but it applies when this scenario occurs where we have a specific product on the PO. It says non-stock, it's material, and the system has flagged that product category to check to see, hey, this product category is sometimes a capital asset. And so if it meets the threshold, then it will capitalize. What the buyer has done to help you indicate that this could be capitalized is by choosing the non-stock. So by choosing non-stock, the buyer understands that, okay, either this is going into the capital system or it's getting expensed if it's underneath the value threshold. And why would we do this? So here there's an advantage to using this option where you buy an asset against a product category rather than, underneath a product rather than a product category, because you get all of the robust description that you set up in that specific product ID. And that is meaningful for some of our clients. So an example of this is maybe you are a company that purchases boiler heater assemblies and you turn around and you sell them, or maybe you are a company that buys them and sometimes you rent them. So if you rent them, then it's something that you would want to capitalize. So at the time you purchase it, really choosing whether something is to stock or non-stock could indicate whether that item goes into your inventory subledger or whether it goes into your fixed asset subledger. And the exact description and the details around it and the serialization of that item, it's assisted by the detail that you've set up underneath that specific product ID. And then, of course, you could also set up specific items that are services, not necessarily as materials, and this will debit the expense account. So this is a little bit more robust than doing just the product category for the service. We've, in this case, set up a specific product called Service Technician. So by choosing the item type as service, this is going to limit what comes up in my product IDs. So instead of getting materials in my product IDs, I'm going to get a list of services. That list of services is built by you, it's maintained by you, and there is a GL determination at that specific service item level, which governs how that item will be expensed when the goods receipt service confirmation happens. So bringing it all together, so here's one PO that's kind of got all of those scenarios on it. Once again, lots of different combinations. So this can generate a lot of confusion. You could decide upfront as part of your configuration, you're not going to support all 8 of these, and you're going to take a general approach to say that perhaps most of your services are just bought using, a product category for services, and the user types in the description. So that could remove, for example, number 8, and instead you're using something more like number 4, where we're just saying it's a service and it's training materials, and that will drive the GL account. Whether or not you're managing inventory obviously impacts whether you're going to use the scenarios that have materials that are stock in combination with a product ID. So that would really mean scenario number 5, number 6, number 7. Are those going to exist? If you're managing inventory, if you're selling products to your customers, chances are you have those scenarios in play. And once again, if you're just doing overhead purchases that outside of that inventory, you could decide to use, scenario 2 or 3. Those are essentially the same. We're just saying in scenario 3, it's maybe potentially capitalized, but as far as the buyer is concerned, the way they do the PO is the same. They're just choosing a product category and they're putting in a product description that's meaningful for the supplier. So just to run over those really quickly, account determination. So scenario 1, determined by the user. So this is the one where they're going to the bottom of the PO and they're inputting the GL account, and that's really overriding anything that they've done in the grid. And so typically that's hitting an expense account. There is the scenario number 2 where you're buying by the category. So those flags are saying that it's going to hit an expense account, and that expense account is determined by the product category. We could have the scenario where the product category has a capitalization threshold. So instead of hitting an expense account, it hits an asset account. We could have services based on the product category. So slightly different setup in the back end, and that's also hitting an expense account. We could buy product into inventory. So in this scenario, number 5, we've indicated a specific product, its material, it's to stock, it's going to debit the inventory account. And then account determination by product master for consumption. So pretty much looks the same, but because the process type was changed to non-stock, the system is going to hit the expense account. And then the account determination by product category, also non-stock. There could be settings behind the scene to say that actually I'm going to capitalize this, so I'm going to hit an asset account. And then lastly, we could set up specific products for services, and then those services would always just drive directly to an expense account when you do the service confirmation. So that's really the summary of all those determinations. I've kind of highlighted in green here the different fields that are governing what's choosing the GL account in each of those cases. So if that's helpful for you, you could keep this for your records. If you're not using all of these different determinations and one of these intrigue you and you want to understand more about it, feel free to drop a question into the question panel, or you can reach out directly to your advisor, and we could set you up with a private discussion if that's helpful. So maybe I'm just going to pause there for a minute and see, is there any specific questions over what I've discussed? I haven't seen anything appear yet. I know I've bombarded you with a lot of materials. Okay, I see one. Not sure if you covered this, or maybe I'm not understanding, but is it simpler or more complex to use a product category without assigning product IDs? Yeah, I would say overall, that is going to be simpler, because if you are setting up, for example, office supplies, that's all you want to set up in your system. I would say probably just set that up as a product category and a GL determination behind that product category. And that GL determination will drive it, but then it will be incumbent upon the buyer to put in the description of the PO exactly what the product is that you're buying. So enough detail that, the person who gets the PO at Staples knows how to fulfill the order, right? Does that answer your question? Maybe I'll log into SAP, and if there's, okay, great, Kairos. I'm just going to log in and see if anybody does have additional questions. I can show you in here while we're doing this. Okay, so I got my password right. Maybe one thing I'll show you quickly. So there was another question. I didn't realize you could create multiple charts of account in ByDesign. I thought you would create one and then create multiple sets of books. No, you could have multiple charts of accounts in the system. And in fact, this environment we're in does have multiple charts of accounts. So a set of books, you obviously could have multiple sets of books and they could share the chart of accounts, or each set of books could be pointed to a different chart of accounts depending how the company is configured. So I'm going to go into the GL determinations. I just want to show you a couple of, because what you've seen a lot in those screenshots was really information around the purchase order screens, but you might be wondering a little bit about what are the mechanics in the back end that are supporting that. So I mentioned the really simple scenario where you have a purchase order where you just do a GL account override. So that scenario is this one here. So regardless of what I put in the row, so in here I could, put in whatever I want, office supplies, and I could just go down here and I could train my buyer to select my GL account. And this is where I'm getting the GL determinations. And you can see in here I have a mix of them. So I have set up some GL determinations to illustrate that they could be your actual GL account. Or if you have the SAP ones, you haven't disabled them or deleted them like I have here, then those are what's driving to it. So underneath our GL determinations, that's under costs, and it's under general expenses. And this is where the mapping supports. So if I were to choose A7 120 meals, that's how it knows to get to this GL account. So all of these data you're selecting here, but you can see in some cases I can set up a GL determination to match the number of the GL account. If at all possible, and you have one chart of accounts, this is the way to go because it's much, much easier for everybody to understand. But you can see here I do have two charts of accounts. In this case, my chart of accounts are actually the same. That doesn't really make sense, but if you did have a different chart of accounts, then I might have completely different GL numbers mapped to these descriptions. So that's what I was referring to there. Now, when it comes to using the product category, so in that case, I'm saying, well, let's add a row here. And really, I want the fact that it's maybe flagged as a service, and my product category is flagged as office expense. In this scenario, it's the office expense product category. I don't really need to populate GL account. That's going to be handled for me. How does it get that information? Now there's two links to set up because we have to create a GL determination for the service in here. And then in addition to that, you're going to have to go into a setup screen for product category determinations, which is this one here. And you're going to have to set up that combination and say that office expense in conjunction with services drives to this GL determination. And then if you want to be able to use it in conjunction with both materials or services, so for example, I want the user to be able to say, well, it doesn't matter whether they do materials or services, or if it's office supplies, they should always do materials. Then I have to configure both of these columns or one or the other column, whichever one applies to the scenario I want. So this can get a little bit confusing to understand as far as and then making sure that your users understand how to create the PO based on how you've configured the system. So another question, the chart of account screen you were just in that shows the account determination and the GL, it is related, the GL it is related to, can that be exported to Excel or a report? Kind of. So if you are in the, yeah, it's this button here. So it's not this specific screen. Unfortunately, if you want to just export this grid, it doesn't pop out. But if you click download account determination overview, this will dump, because there's a bunch of many-to-one relationships here, right? At the highest level, you've got multiple charts of accounts, then you've got your subledger groups, and then you've got your individual subgroups, which are your categories here, and then ultimately you get to all of your rows. So what does that give you? A really complicated spreadsheet when you export it. Just give me 1 second to open that. And so you'll get a spreadsheet that looks like this, and it kind of tries to break everything out for you. So there's all of your subgroups, and there's all of those accounts. So that one we were looking at, for example, was costs, and then they've put into different areas. So there's the ones for general expenses. So you have all the data there. It's just in a little bit of a kind of mishmash all over the place. So you'll have to go find it. Hope that helps you, though. If you are trying to do an analysis, this can be useful. So that's really the, well, then maybe the other ones I'll just show you is then if you are managing GL determinations for specific items, that's typically set up in the inventory tabs. So for example, if you are creating purchase orders for items, those items could belong to whatever number of groups you have. Those groups are raw materials and supplies and things like that. This is the account it would debit if somebody has chosen this item to be purchased into stock. If the item is being purchased to non-stock and the expectation is it will just go to an expense account, that GL determination is right here. So it's under the material consumptions. So understanding what each one of these is another whole training session we could do. But it would be important to know how these work in order to support setting up that all of those purchase order configurations. Any other questions? I'll just give it a few seconds. If not, maybe we'll start to wrap up, and then I really appreciate everybody's participation. I hope this is helpful. If there's anything here that is, still confusing you or specific to your system that you want to discuss, once again, feel free to reach out to us. We'd be happy to continue the conversation. I hope this hasn't turned you off of the purchase order scenarios. It is complicated, but it's important to understand all the different scenarios so that you kind of get this right and you come up with the best options for your business. So if there are no more other questions, then I think I will stop there, and I'll turn it back. I think my associate is probably going to stop presenting, but this will be uploaded, and you should get a follow-up email where you can get the download link. So thank you, everybody, for attending.